So yeah, so union budget got presented. It gets presented every year. Uh, Typically, union budget used to have a lot of power when it comes to making the whole decisions. But today, if you see a union budget to a large extent just shows you the thought process of the current government and where they are heading towards. But in terms of the economy and the other bits, it has stopped making that much of a difference, and I will show you why I say so. So a lot of people say that hey, this is a we have to follow budgets and everything. Definitely do follow, because it shows you the direction which a country is going. But from an economic side, states have started taking a lot more ownership. So a lot of people don't follow their state budgets. So if you really want to know where the country states are going, you have to follow the state budgets, because those state budgets are actually are going to be making a lot of differences in the states rather than the central budget, which is also important. But over the years, it has stopped having that much difference because a lot of powers are moving towards the state governments. Now, today's agenda would be we are talking about where this government is heading. What were the areas in this budget they have tried to focus on? And you might get interested by some, or you might say, hey, we don't know why they have been focusing on this particular bit. Personal income tax, stock market, and real estate. So I focus mainly on the stock market. So I was interested from a budget point of view is from the stock market side. Then understand the budget, and finally, what are the next steps if they are something which we can benefit from a stock market perspective. Great. One of the big issue which this government has realized, I think after the elections, is that employment issues at the ground levels is getting affected drastically, and they have to work on it. So that was the main issue, and they have tried to bring three things, three particular schemes which they are trying to do. So first, what they have said is now for the first time employee, if he earns less than 1 lakh per month, he's gonna get a EPF of 15,000 from the government side. So they are just giving an incentive for that particular employee. If he earns less than 12 lakh a year, that he's gonna get some EPF from the government side. Finally, there a lot of companies and a lot of people in the social sector goes in the consultancy business. So what government, and they don't go to the EPF side because companies don't want to pay you the EPF if you are in a consultancy a bit. So government is saying if companies employs you now for up to 3,000 for 2 years, they are going to pay the EPF of that employee to the employer. And thirdly, they realized, and what they are also saying is in 5 years, they are trying to train 20 lakh youth. Now, it's a very powerful scheme, what I believe is, but we have to see the implementation on the ground because providing youth employment is a major issue. But how this government can tackle that is a little bit of a gimmick. So I don't know how they are going to tackle. So this is a very big policy and has a lot of nice initiative. But this is a operationally a huge challenge. How do they get that on the ground? So that's where I believe we have to see it on the ground. That how do they see uh, training these 20 lakh youth on the ground? Finally, while women employment has improved, our statistical data shows that it has fallen drastically during the COVID. So I again feel it's a great policy, but implementation would be a great challenge. So women hostels and creches, they are saying that they are going to build a lot of women hostels so that women can work over there. Now, what I want to point out is this is not going to be a 1 year phenomenon. Every year you are going to see in every budget that they will be focusing again on the employment and again on ensuring that women gets into the workforce. Why? Because women is also a very big vote base for them, and in rural has really hit them hard this time in the election. So if you have followed the elections, they have got a good vote bank from the metro cities, but from a rural they has got a hit. So that's where they are trying to tap in. So if you're trying to look at the budgets, don't look at a 1 year cycle. Look at always from a 5 year cycle that where this government is trying to move, so that you can understand the where this particular direction this government is trying to take. Now, another thing they have done is they have brought down the corporate tax rate from 40 to 35%. Now, what it can do is a lot of foreign companies can start setting up their bases in India, which is a great thing. And also, India was taxing at the highest rate all over the world, so it's good that they are trying to become bit more competitive when it comes to these things. Simultaneously, in the budget 2012, they brought taxes if a fund was coming from a foreign to a startup. Right? Everyone knows last year there was completely a dry down of funds for the startups, which was very bad because if you see the change combined with the existing startup cost funding to plummet to just 11 billion, which was lowest ever in the last 5 years, which the funding the startups have got. So now this year, and they have introduced it last year itself. So this year, Nirmala Sitharaman has removed this angel tax on the startup. So now if someone invests in a company, they don't need to pay the angel tax on that company. So I believe, so what I want to start with is good things and the directions they are going. I hope till now you are with me. Another great thing they are doing is, so I'm also looking at a this diamond perspective from the investment perspective, because diamond industry is on a cusp of a transformation. So I don't know whether you know that in diamond, there used to be a real diamond, and now there is a uh, manufactured diamond which can be created in a lab. This lab-grown diamonds has disrupted the whole diamond industry in a big way. So a price of a diamond which used to be a 1 lakh has come down to 30, 40 at this particular point in time if it's a natural diamond. And lab-grown diamonds used to be at 30, 40 at the start of the same size, has also come down to 20,000, which has really affected a lot of diamond industry people. And I was not aware of this. 14 out of 15 diamonds set in jewelry worldwide are cut and polished in India, which is amazing, right? So, which makes that a lot of our skilled people in the diamond industry are based in India and mostly in the Gujarat area. So, what they have done is they have brought something called the harbor rates. So what it says is, now if Harsha is a person who sells diamonds, raw diamond from US to India, before there was a whole valuation and everything used to happen. But now if Harsha sells it to me, he sells me for 15 lakhs and the tax rate is 10%. So on 15 lakhs, Harsha has to pay a clear cut tax of 10%, and that tax is 1.5 lakhs, and Harsha has to pay 1.5 lakhs, and that's it. And that's all what he has to pay for it. So they have made this very simplified. What I've read on the internet is it used to be very complicated. So now we can expect that a lot of business is going to come to the diamond industry in the coming years in India, which has started going to the other countries. So I think that's a good initiative. Now let's come to personal income tax first. So you guys are correct when you say there were deductions at the low end. Hi Bharti. So firstly, they have reduced. So again, it's a directional thing which we have to understand. So what they are saying is, if you used to have deductions, and I was a big favor person who used to favor deductions. So what they are saying is the directions on the that front is going to change, and they are saying from the old regime you should now move towards the from the old regime you should now move toward the new regime. Now I told you about the diamond industry. So what this company is again saying is that you don't need to think about all deductions. Harsha earns 15 lakhs, pays this amount of tax. That's it, clear cut. No if and but over there. What used to happen is country where there are a lot of deductions, people are able to find a lot of loopholes, or CAs are involved when you have to file your taxes. Hey, I can take this kind of a deduction, I can take this kind of a rebate, and that's how people sometimes are able to evade the taxes. Now, in a new tax regime, there's nothing like that. If you earn up to 3 lakhs, you don't have to pay any taxes, and then there are particular slabs which you have to pay. So now you can take a screenshot of this. So earlier, if you were earning 0 to 3 lakh, there was no tax slab. Till now also, there's no tax slab. Now, from 3 to 6 lakh, it's 5%. Now they have increased to 3 to 7. So over the time, you can start expecting that deductions will not be able to get you any discount in your income tax over the years. And this government has been doing that from 2014 itself. So over the next few years, you can see, but please don't stop putting money in the PPF or other NPS and other instruments, because they are really the sources of your revenue when you retire. So while government is on an intention that, hey, let's make the income tax very simple, but I was a proponent of deductions, because this was an incentive for people to save money for their future. But this government is on a direction that let's make our income tax very simple. It earns uh, 50 lakhs at 12 to 15, pays 20% tax. That's it, no deduction, very clear cut, and that's where it happens. They've also improved. Standard deduction has been increased to 75,000. So what it means is, if Prashant earns 12 lakhs, 75,000 gets minus, so it's around 1125. 1125 comes into the uh, bucket of 15%. So Prashant pays 15% tax, and that's it. Clear cut completely over there. So that's the direction which this government is taking. But you need to understand, EPF and other schemes are very powerful. However, they have still kept one deduction, which is the NPS. So please keep investing in NPS. I hope everyone knows over NPS over here. What is it?
A pension scheme where we can save up to the retirement age of 60, and after that we can withdraw up to 60% of the total lump sum. Then
Yes.
we can withdraw on a periodic basis.
Correct. So if you don't know about NPS, if you can do one thing after this session is, please go out and research a little bit about NPS. I promise you, this is one of the best schemes which happened, and uh, this government brought this into the income tax that we can take a rebate out of it. Is a game changer, and it's still 50,000 that you can take a rebate. So if you are working for a private, public, or any company, you can take a rebate till 50,000. Now, let's come to the interesting part about long-term capital gains and short-term capital gains. So this is my favorite part because I try to help people with this stock investing. And I believe over a long run, this government has not done the right thing of increasing the tax rates on the stock market's long-term capital gain. So long-term is any investment. If I invest in Godrej properties and put that money for 3 years, that's considered to be a long-term capital gains more than 1 year. And if it's a shorter than 1 year, then that's a short-term capital gain. Now, the issue with this is, I'm okay if they would have increased on the short-term capital gain because a lot of short-term capital gain is like a gamble that you play over there. But when you put money in a company for a long term, you're actually helping the economy to grow. The stock market is the best way for these companies to take money because if they go to a bank, they have to pay interest rate and everything. But when they come to a stock market, they don't need to pay any interest rate, but they have to share the profits, and profits is afterwards. So tomorrow, if Godrej Properties make money, I will get money. If it doesn't, so I will not get the money. But it's not the way a loan works when they take it from the bank. Now, what they have done is it was 10% earlier. Now they have increased it to 12.5. So what I believe is it's not a huge game changer, but again, the direction of this government is that they are trying to persuade people to go away from investing in the financial products, which is really not a good direction for an economy. They should have encouraged this. And over the last 10 years, if you hear them, they had been saying that we want people to get into the financial products, but this particular direction shows me that they might be thinking of moving from that particular direction. And the other schemes which they have launched have also shown me that they are changing their directions. So I'm worried that maybe in the next February 2025, when they introduce the next second budget, they might increase this 12.5 to 15% as well. A lot of people are saying about this. So just be aware if you're investing in stock market that long-term capital gain at 15%, what it does is it reduces the amount you can actually get from your stock market investment. And we invest in stock market to get returns and to ensure that we have a proper money for our retirement or for things which we love to do. So that's you need to be careful about. And short term, they have increased. Yeah, they have increased from 15% to 20%, which is a little bit on a higher side because it's a choice which people make. So they could have tried to stop people from playing too much in the stock market through different means, through different methods. But now what they have done is through this, people who are really investing in the stock market in the right way, they have disincentivized them as well. Any thoughts, any perspective?
I think they're trying to promote fixed deposits, I guess.
But they are actually not doing that as well. So they have not given. So that was one expectation which people were having. So they have not given any incentive for fixed deposit also. So that was a bit surprising. So where they have given incentive was gold. I think I have talked about it. So they have reduced the tax duty on gold this year. So if you are importing gold from outside, initially you used to pay a very heavy tax duty, but they have reduced that this year. So that's the direction. And gold is not a good investment because India doesn't have uh, mines where they can take out gold. So we import all the gold. So we are importing. So our currency is gonna go out for importing gold. And gold is a great asset because its value remains good, but it's not a productive asset. You can't use gold in making things apart from ornaments. So that's the problem with the gold. So gold stores in reserves, but silver is much more a productive asset if you study about it. So that's a little bit of a worry for me that where this direction is going. Do they want people to invest in the? And by the way, another thing is they this year have not increased the taxes on cigarettes. So I don't know, Harsha, you're in Hyderabad, right?
Yes.
Babu Naidu from Andhra fought for the farmers or tobacco farmers because a lot of tobacco farmers are from Andhra and they have got real hit from the last 2 3 years whenever government was increasing the prices of tobacco. So you can actually expect in the next few years that the taxes on tobacco might not rise the way they have in the past till Chandrababu Naidu is there because he's a very big proponent that we have to safeguard the farmers of Andhra who are in the legal uh, yeah, Bihar and Andhra got the other provisions as well. So who are in the legal business of cultivating tobacco production. So that's where I expect that the next 3 4 years we can expect that ITC might be in a good terms with the government because of this indirect relationship of Chandrababu Naidu with the government now. Now this is interesting. Real estate taxes has come down from 20% to 12.5, but there's a catch that they have reduced the indexation. Now, would anyone would like to help me understand what is an indexation?
On increasing right with time. So basically indexation is I think Just one second.
Chetan, it's very so. For example, every year the bread, if you see the milk, the bread prices increases. Similarly, what the government says is every year the inflation, you can capture the inflation. So, for example, Chetan in 2020 bought a property for 100 rupees. Now next year that property increased to 130, but the inflation was 10%. So according to the government, if Chetan would have, the property should definitely increase by 10 rupees. So the profit which Chetan earned was not one, is not 30 rupees, but it's actually 20 because 10 rupees is the inflation which he has got. Uh, Give me a thumbs up if you are able to understand indexation. It's a big point because they have removed it from there, but a lot of places indexation still works in capital gains and other places. So let me give you another example. So let's say there's a bread which you buy regularly. Bread every year increases their price because there's an inflation which goes into it. So that's why every commodity price increases by a certain amount. However, things sometimes jump in a valuation higher than that. For example, you got a property for 200 rupees, property increases to 300 rupees. So you have got a 50% gain for that particular in 1 year, let's say. But the inflation in that particular year was 10%. So 200 should in every case would increase by 20%. So 20% increment is 220. So 80. So your gain is 80 in that particular year rather than 100. But now the government has said is they are reducing the taxes, but they are also taking away the benefit of indexation. Now this is good for some, and this is going to be bad for few people. So if you see on the capital gains, so let's say a house was bought in 100, it was sold for 300. The cost of indexation was 363. So the capital gain would be minus 63. So in the previous era, he would have need to pay zero taxes. Now, if this has been bought at 100 and sold at 300, now this particular budget says there will be no cost of indexation. So the capital gain would be 200, and with 12.5, the tax on gains would be 25%. So if the cost of indexation is higher, uh, then you would be getting a loss through the new policy. However, it has been seen that property prices in the last few years have increased at a higher rate than the indexation. So to a large extent, while a lot of people would say that this is not a great thing, it's actually great because Indian property market has been going higher than the inflation rate. So this particular policy will help you in the long run. So but if you're buying a property only for a very short term, 1 or 2 years, then this policy might hurt you. So if you have a family member who might say that, hey, this is not a great policy, help them understand. People who buy property for just for a short term, they might get hit, and people whose property valuation doesn't increase higher than the inflation, they might get affected. But people whose property prices have increased higher than the inflation will get benefited because of it, because final taxation will be lesser on their property prices in comparison to the previous policy, which was there, that you can take the benefit of indexation, but you have to pay us 20% tax after that particular point. Uh, Take a screenshot, or I'm going to send you the recording of this particular session after this to help you understand about this particular bit. Now, another thing which they have done bit on the bad side, but there's a side clause by which it's going to benefit the Indian economy is they have put a tax on the buyback. So till now, what used to happen is Ketan has a shares of, let's say, ITC. Now, ITC, when ITC buybacks its shares, so what is a buyback is ITC says, hey, I have got a lot of money in my bank and I don't know what to do about it. So whoever has got my shares, I'm going to buy back from you at a particular price. And because you are my shareholder, I'm going to give you a premium for that. And I'm going to pay to the government 20% flat tax. So you don't need to worry about it. So that was good. So 20% tax used to be paid to the government on the buyback of shares. But now what the government is saying, Chetan owns ITC shares. Now ITC says, hey, Chetan, we are going to buy back from you, paying you the premium and everything. Now Chetan's salaries falls in the 30% bracket. So now Chetan will pay 30% tax, but Prashant, his salary falls in the 10% tax bracket. So Prashant is going to pay 10% taxes. Now, it sounds interesting that government is trying that people who are in the lower brackets is going to pay lesser taxes. But what has been seen is most of the people who invest in stock market are in a 30% bracket. So they would be getting a higher share of taxes through the stock market. And please understand, it's not only the taxes which pay, but every time Chetan transacts shares through a company, he also pays statutory transaction charges as well. So overall, he's gonna pay now a 35% kind of taxes on the stock market. So government is India is really booming on the stock market share. but government is trying to take away the cream of the stock market by putting so much taxes over there. So that's the direction they are taking right now, where they are trying to incentivize people from investing in these financial products and asking them to invest more. So gold is going to get cheaper now, and real estate uh, selling might get more easy for the people to do over the next few years. Futures and options. Now, future and options is a proper gambling in the stock market where you say, hey, I know that ITC prices are gonna go up. I know ITC prices are gonna fall. Most of the times, there's a lot of big rationale on this, but a lot of time it's just a pure gamble. And if you see, what they are showing is National Stock Exchange of India was doing a transaction of 30 billion on futures and options, and Bombay Stock Exchange again somewhere on 5 billion. But all the other economy, if you see, were very small when it comes to future and options. So India, a lot of people who are investing in stock market has actually taken the future and options because you can make huge amount of money, but you can also lose huge losses. And like you would have heard a lot of bad stories from the stock market. So most of the times that happens when people invest in future and options, because future and options most of the times it's either a day trade or a weekly or a monthly trade. So what the government has done is they've increased the taxes on future and options from 0.02 to 0.1 respectively, which is a 50% hike, which they have done over here. So which is a huge amount of increment which government has brought on future and options. Slides got little bit mixed. Yeah, future and options taxes is a good thing because you don't want people gambling and losing their homes, because the stock market, while can give great returns, but it can be a very negative force as well when the negative tide comes back. Yeah. So if anyone in your family trades in the stock market, you can just show them this particular screenshot, that if their holding period is less than 5 years, then this might be negative, and if the property appreciation is less than 10%. But if you see the last, so I was trying to analyze few of the zones: Delhi, Hyderabad, Chennai, Pune. All property prices have escalated on an average higher than 10%. So if you have a holding period of greater than 10 years or property appreciation has been greater than 10%, then this would be a great policy for a lot of people. Now, this is a very interesting slide. And here we are switching the levers from currently to the policies to understanding the budget. Budget, if one number you have to see is every year, is the fiscal deficit. Fiscal deficit is government earns some money from your income tax, from GST and other things, and then government does this expenditure for defense and other things. And most of the times, government expenditure is higher than the income. That particular gap is known as fiscal deficit. And how do the government fills that? It takes loans from the World Bank and other entities. Now, India during the COVID reached a fiscal deficit of 9.2. And what they say is this is a loan on the future generations. So a lot of countries, China, US, has a huge fiscal deficit, but India, interestingly, is coming on a lower trend. And while I don't like this, I have a lot of issues with this particular moving from the financial thing which they are trying to do. But I am really glad that India fiscal deficit is coming, because this shows that India is moving on the right trajectory when it comes to the loans which it has been taking from the World Bank. And if we become net positive, then on the global scale, in the big economies, we would be only the country which has got a net positive when it comes to the fiscal deficit. So hopefully, if the government trajectory goes on and the India growth story keeps on going, we might be the only country in the big economies which is net positive when it comes to fiscal deficit on the national level. Now, this is the income and expenditure. It's very interesting. If you see, income tax only provides 19%. So a lot of people says that government is charging money from people. It definitely is charging, but the way the maximum money is coming is it's borrowing. So still it borrows 27%. Then GST and other taxes, which everyone pays, is bringing that 18% to them. So while we believe income tax is a huge component, definitely it is, but it's 19% which is bringing. And over here, can you tell me?
Interest payments.
Correct. So now, Harsha, what is happening is, like, what is happening is this: the moment of fiscal deficit, it's like a loan payment which our country is doing every year. So if this particular percentages goes down, then government will be putting this money in all the other places which have their scope, which is going to be a game changer if 19% of your income is going only for a loan payment. So I'm really hopeful. While this, there are a lot of flaws, and uh, I'm not a very big fan of the current government or any government, but what I'm really hopeful is if this interest payment comes down 10% to up to 10% also, this 9% can really boost our defense, our other sectors, which can be a huge game changer, because then government would have ample money to help people provide a lot of good services, and simultaneously put money in our defense and other places as well. So defense is growing, but it's still at 8%. And considering India geographically, India too needs a huge defense budget. We as Indians should have no doubt about it that India defense budget has to be on a higher side if we need to safeguard ourselves from our neighbors. And luckily or unluckily, we are surrounded by neighbors which are always on the offensive side. So India defense budget needs to be on a higher side. And while it's at 8%, it would be good to see it increase. And with every growth in the overall GDP, this budget percentage wise brings a lot of defense equipments to our country. So another great thing is, I don't know whether you follow the defense stocks, but they have boomed like anything in the last 3-4 years. However, what I feel is they will subsidize, they will come down because right now it's booming like anything. Yet, what I believe is it's a long-term story for the next 15, 20 years. Indian manufacturers in the defense segment is gonna grow tremendously, and India percentage of expenditure on defense is also going to keep going on a higher side. So, please keep on a lookout of defense. That would be an interesting play. Now, can anyone tell me why Titan and ITC, the day the the budget got presented, why these two stocks were rising like crazy?
I
Go
think
ahead.
ITC reflects the rural consumption as well. So I think the money going to the rural households will be spent on ITC products at large, maybe. So
Nice observation, Harsha. Anyone
yeah,
else?
consumer spending maybe, yeah, expected to increase.
Yeah, correct. Anything else?
ITC because of cigarettes,
Correct,
more
Divya.
taxes
So
on cigarettes.
yeah, so Harsha, you are correct. But ITC also got benefited hugely because the tax. So ITC does a lot of things, but 80% of their revenues comes from only one product, which is their cigarettes. And every time the taxes on cigarettes increases, they have to increase the price, and the volume of sale of cigarettes reduces just because of their percentages. The revenue remains same. So they want to keep the volume. So this year, because they have not got a hike in the taxes, so they can keep the same prices. So that's why ITC was booming. What about Titan?
No.
Okay, so Titan, I was telling you, India doesn't has a mining of gold, and India imports all the gold, and India is the highest, I think, the highest consumer of gold. So they have reduced the import duty on gold. So now what will happen is gold is going to get cheaper by 5,000, and uh, we all, either it's north or south, we all know people fascination with gold, and with if the stock market crash happens, there will be a huge buying frenzy for the gold. So that's where Titan got benefited, and it's not going to be a short story. For the whole year, you can expect that Titan might get boosted, and the other gold players can also see boost in their income because of this particular scheme which they are doing. Uh, but Tata Consumers, again, an FMCG player. So this government has got a very clear message from the elections that they have to work on the rural income, and both the ITC and Tata Consumers comes in that particular space. Pharma, they have launched some schemes. So you can also keep a lookout on pharma, because what they're saying is after IT, pharma would be a very big industry when it comes to Indian players, because India again has all these benefits of low cost of resources and huge manufacturing plants which we can establish, and amazing minds which can work on producing the best medicines for the whole world. So India would be the manufacturing hub for the farmers. So a lot of pharma players are getting benefited because of it. Great. Now this is a very important slide, and I hope so. Nothing much has changed for investor post budget, except one has to pay higher capital gain tax. So if you have been buying short term, then from 15 to 20%. But if you are a long term player, you have to pay from 10 to 12.5%. Budget has laid a foundation for development because they have reduced the corporate taxes for a foreign investor. Angel tax has been removed. So what you can expect is startups can again find little bit more footing in comparison to the last year in this year, because a lot more people might come back to invest because their taxes has gone. Employment and higher income is a long-term goal which this government would be having. So that's interesting. One sector which I'm really focused on is this time in the whole budget, they talked about tourism 10 to 12 times. So while they have not introduced a lot of schemes, but they are talking about developing Odisha, developing Tamil Nadu and other places for the tourism part. So and it's a low-hanging fruits. India has a huge population. People want to go simultaneously. A lot of global people have a inclination towards India. So we can really earn a lot of good revenue from the tourism. So after defense, you can expect that the big focus of this government would be tourism, and what they have done with Ayodhya or Gujarat with Sardar Vallabhbhai Patel statue, we can expect that this government can think of tourism in a big way. So hotels or places which runs because of the population, people want to go out, but there are actually not a lot of places. So places which are good and they are offering at a decent price points will grow tremendously. Think about a huge amount of wealth growth, but in metro, you actually don't have good spaces where you can spend time with your family and friends. So tourism and finding great places, and if they're offering at a decent value, would be great places to invest in the next few years. And if you invest in stock market, don't be surprised if in next budget or next to next budget, there's a again increase in the capital gains, long-term capital gains tax. So this 12.5 might be just a starting pitch for them to really prepare people for the next things which are going to come in the next upcoming budget. So, so overall, if you have been have been taking benefit of the personal income tax, you might want to see if the new tax regime might benefit you in the next year. Simultaneously, if you have been investing in the financial products, please keep investing because India growth story is intact. The only change which is brought in is a little bit of a tax component, but please don't get swayed that hey, taxes are there. Gold is going to get cheaper. So if your family member wanted to buy or they wanted to buy, it would be a good time to buy. So that's where what I am able to think. Defense is going to be a great sector, but you need to have a proper understanding of defense. Please don't be one who just read a CNBC report and start investing because these stocks in the last 1 year has grown tremendously. And please remember that their main customer is only and is only one customer, which is Indian government. If still Indian defense companies are not able to supply a big volume to the foreign competition because there's a lot of competition. So they have only one customer, which is Indian government. So they have a huge power to control these defense companies. So that's why you have to be very knowledgeable to understand the reality of a company when you invest in a defense company. But ITC is going great. It has been a favorite for the last 2-3 years. So that's where I think are some of the interesting names which you can think of. Now, as I told you, the stock market is budget is not now such a big thing when you really think about investments and other perspective. And on personal front also, they have not been making huge amount of changes over the years. Uh, but on the day the budget got launched, the stock market fell drastically first, but then it recouped a lot of the gains. However, a lot of times what we have seen is, and 2019 was again the election year, where after a month the stock market fell drastically after a month. So I don't know what might happen, but what my analysis is, with such a high valuation right now of the stock market, with capital gains increase and government showing a direction that we might people not to invest too much in the financial products, there might be a downward rally which might come in the stock market in the coming 1 or 2 months. That's what my thought is. Some of the sectors I would have definitely talked about it. If you want to study, I would say tourism, FMCG, infra companies, pharma, and agri-related business would be a good place. But please be wise. If you have time, study them and then invest in these companies. That would be my suggestion. Great. Now, anything which you want to ask, I'm happy to hear from you. And yeah, we have a group, Nivesh Gyan, where so yeah, open to discussion. What do you think about the budget and what's your thought?
Prashant, I just wanted to ask, do you think in future it's going to be a good time to buy a house or invest in real estate? What do you think?
Yeah, so see, real estate is also like a stock market cycle. So right now it's on a very high footing. But house is a very different level of investment. So if you are thinking of living in a house, so most of the times people say don't think about the price, just buy because you are thinking of the next 10 to 20 years, right? But if you are thinking of an investment, then you have to think about the cycles and other things. But it's you need a house, and India prices in the next 5 years are going to be on a upward trajectory. So today it might be high, but the next 5 years, 10 years, and if you are thinking of a house to live, then every time is a good time when you think of a house because you are thinking of a 10 to 20 years. Thank you, everyone, for joining. Hope you get something out of it. You understood how like is union budget actually is that much important, and simultaneously how you can definitely there always is going to be some negatives, but there always are going to be some positives as well. Where you want to focus, and at the end of the day is are you going to get benefit or yeah, just going to keep making noises. That's the important thing. Find those nitty gritties where they are good signs. find those and just play on those particular bit. Why to focus on the negative parts? No government is perfect, neither this, neither the next government which might come. So